This segment sponsored by Foster Financial. Welcome back to Money Monday with Foster Financial, and I'm so thrilled to be chatting with Caleb Doane, their Vice President. Hey there, Caleb.
Hey, how you doing?
Welcome back. Good.
Thanks very much. Yeah.
I may be doing better than the markets.
yeah, possibly.
Which are a little volatile, up and down, really down. What is happening right now?
Yeah, obviously there's a lot going on in the Middle East, of course. So we had talked a little bit, last time about how there can be a lot of short-term fluctuations with stuff like this. Usually when it comes to kind of long-term changes in the stock market, it's usually corporate earnings that are the biggest driver of that. But still, when you see big swings like we've seen in the market so far this year, it can always cause you to take a look at your 401k and see what's up or what's down. And one of the things that we talk about with clients is sector rotation within the markets.
Okay, what is that, sector rotation?
Yeah, so the S&P 500, which is a common index that people follow, essentially all the companies in the S&P are broken down into the different sectors that they're in. And just because the overall index might be down year to date, so at the beginning of April, the S&P is down so far, but certain sectors within the S&P 500 are still up. And so one of the things that we do as investment advisors is we will overweight or underweight certain sectors, overweight the sectors that we think are going to perform well and then underweight some of the sectors that we think maybe aren't going to perform as well. So even so far this year, even though at the beginning of April the S&P was down, there are certain sectors that are still doing really well. So energy is up year to date. Maybe you notice that at the pump. There's a reason why gas prices are high. So that energy sector is doing well. Consumer staples is still doing well. Utilities is doing well. So that's an opportunity to maybe outperform the market if you're able to overweight some of those sectors that are doing good.
That's so interesting. And speaking of the energy thing, I was watching national news and they were saying how the national average hit the highest for gas at $3.86. And we are, Fort Wayne, Indiana, over the national average because last week I got gas, it was $4.20.
Yeah.
And I was like, what? This is crazy. So in that way of seeing how the markets perform, you say you can kind of predict to see what sector to focus on as things change. And so that sector rotation. So how do you all, outside of guessing and just, trying to just monitor what's happening in the world, how do you really know what to focus on?
Yeah, we take a look at our crystal ball, and then we decide. No, of course, nobody knows exactly what's going to happen, but there are certain sectors that tend to perform well under certain market conditions, right? Okay. So there are certain sectors that are a little bit more defensive. Oftentimes these might be like utilities, consumer staples, and healthcare, for example. So even in a recession, those sectors tend to outperform. They still might be down a little bit, but they might not be down as much as what tech is down in a recession. And so we'll look at some of the market dynamics, we'll look at expected future corporate earnings, look at GDP expectations, and we'll essentially say, hey, what do I think the likelihood is of a recession over the next 6 months or over the next year? And if we think it's higher than what it normally is, maybe we add a little bit of those defensive sectors into the portfolio, and we'll overweight those a little bit, and maybe we underweight some of those, more sensitive sectors like communication services or tech. Those tend to get hit pretty hard during recessions. So, again, it is a little bit of educated guessing, right? Looking at some of the projections for what the U.S. economy is going to do and what individual companies are going to do, and then we make educated assumptions based on how it fits in our client portfolios and overweight certain sectors and underweight others.
Interesting. Well, Caleb, while we have you here, how much information can you share as far as what we're looking at in the next 6 months? Do all signs point to a possible recession?
Yeah, I would still say it's less likely than likely, that we would have a recession. If I had to guess whether there would be a recession in the next even 12 months, I would say likely no. One of the things that we added to a lot of our portfolios at the beginning of the year is what we call a value tilt. And so a lot of times equities can be broken down into growth equities or value equities. The value-oriented side has like a lower PE ratio. Oftentimes it's paying more in dividends. Sometimes they're a little bit more stable companies. On the growth side, it might be more of your tech-focused companies, maybe don't pay a dividend. We went a little bit more value-oriented at the beginning of the year just because we were anticipating some of the volatility here. And so far, it's been good to be a little bit more value-oriented. Now that the market's dropped, maybe we adjust some of the outlook and reallocate a little bit. But yeah, that's kind of a vague idea of some of the changes that we've made.
Wow.
Yeah.
And I know sometimes they say when the market does go up or down, kind of like watch it and, it may recover. So what are the benefits for the investor to do sector rotation as opposed to just allowing for their current account to just have their ebbs and flow?
Yeah, it's a good question. I mean, one, it can reduce volatility, right? So, I mean, it doesn't have to go down as much as what the rest of the market does. And also, if you, chose wisely with sector rotation and maybe the S&P went down 10% and you only went down 5% because you were in other positions that did better, well, that could give you a good opportunity to rebalance and maybe sell out of some of those positions that have outperformed, buy into some of the positions that have dropped more so that if it does recover 10%, you're able to recover the full 10%, even though you only went down 5% in the beginning. So it can give you some opportunity for outperformance there, especially when the rest of the market moves quite a bit.
Fascinating.
Yeah.
The market is a crazy place. That's why we need you, a financial advisor, to help us along the way. So thank you so much, Caleb.
Yeah, thank you.
And if you would like more information about Foster Financial, we'll have their website and their phone number listed below. And I'll see you after the break. This segment sponsored by Foster Financial.